Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's finish our discussion of the setup of the current week on the euro currency. So you can see the action within the current week was a bit choppy. So although the in general market meets our expectations, so we said in the weekly research that due to the terrible events in the Paris, and probably market will open with the gap down, but the gap was a bit smaller than we have discussed in our weekly research. And later market has started the upward retracement. As a result of this retracement, we have some moment that makes situation on the daily chart is a bit tricky. And this moment stands around the daily trend. The problem is that according to the Jed-Napoli framework, you could enter short only if you have the corresponding context, the bearish context in the market. So you have to get either bearish trend, or you need some Jed-Napoli bearish directional pattern that overrules trend. So you could get the trend bullish, but you need to get the directional bearish pattern. Here, guys, we have neither first nor second. Our trend is bullish. Here has turned bullish as a result of this upward action, and trend is bullish, and we do not have any bearish patterns that are developing right now. So strictly speaking, if you trade on the daily chart, you should not take the short position yet. So because you need to wait when the trend will shift bearish again. But it seems, guys, that this action mostly has the technical feature, because market is trying to close the gap, and this has happened. That as a result, market shift trend to the bullish side. But despite what stands in the core and the background of this action, we have the rule. That's why it will be safer if you trade on the daily chart. It will be safer for you just to wait when the market will shift trend bearish again. And only after that starting to think about the taking the short. That's the trading plan for the careful traders. For those of you guys who trade on the intraday charts, we have some different setup. And you will have the choice either to follow this setup on the daily chart or trying to trade on the intraday charts. This is for those of you who trade on the intraday charts, especially on the hourly chart. So if you'll take a look at the hourly chart, you'll see here is our gap with open. Market has shown the action trying to close it and move slightly higher than we have suggested yesterday. So you can see market has reached the weekly pivot point, tested weekly pivot point, and closed the gap that was formed here. Here, guys, with this action, market has not quite closed it. And here is market shows a bit higher action to the upside. So we have the signs that suggest the possible market already is reestablishing move down. Because take a look, market has completed the harmonic retracement on the hourly chart, on the daily chart. Trend finally has shifted bearish, as we have suggested yesterday. And also, we said if you would like to take the short yesterday, you could also wait for a possible reversal pattern that should be formed here. And this reversal pattern can point you the possible destination of this retracement, the final point of this retracement. You can see that market has formed the butterfly cell. That's why, guys, you, as I said, have two different ways to act. First is following the trading plan on the daily chart that we have suggested. Second, you could try to dance around this butterfly. So as better butterfly has been confirmed, market has tested weekly pivot point and drop lower. Also, we have the suggestion assumption that probably this upward direction was deeper bit retracement that we have suggested initially. It could be the result of the opening gap standing and attempt of the market to close this gap. This also could happen. So if you would like to trade in some kind of the anticipation of the possible reestablishing of the bearish action here, you could try. In fact, this is the same choice as yesterday. So you could try to take a position based on this most recent action down. So you can see this market starts moving down. You could try to trade this on some retracement back to some fib level. From this top to this bottom, this market will show some bounce for retracement. This again is attempt to take into a short position here. But guys, you should take into consideration that you're trying to anticipate the real trend shifting, because market really could continue action, for example, inside of this channel. So possible. So upward action, market shows some retracement and continue move high. This is the risk that exists because the daily trend, maybe it's just the technical trend, but the daily trend right now is bullish. That's why you should understand that here you're trying to anticipate the reversal of the trend and the trend shifting on the daily chart. Maybe this particular will happen and is happening right now because the signs exist of this. But this is just a risk. This risk probably will be not really significant because this swing down is really not really very large. So especially if you will take position some retracement, the risk will be even smaller. But guys, you're trying to take the short position with the daily bullish trend, and this is always suggests the risk of the possible upward continuation. That's why this choice here again is up to you. So as the conclusion here, we could say that signs of the possible reversal and reestablishment of the bearish action right now exist. Hourly trend has should bearish. We see the signs of thrust. You can see this big candle down. So maybe this particular right now is a reversal is happening. But the complicating factor that we have stands with this trend on the daily chart. This makes overall situation a bit tricky. Also, guys, you could keep an eye on the 4-hour time frame chart because market here was in the downward channel. Right now we see some upward bullish reversal, attempting to close the gap, and right now market is turning down. As you can see here, market wasn't able to reach the opposite lower border of this channel and moves up. If it will return it back down here, well, maybe you could use it as an additional moment of the possible bearish continuation. So, but overall picture doesn't look absolutely perfect from the bearish point of view. So be careful.